Welcome to another episode of Centrally Speaking, the best TV program.
The program that keeps you informed on the work and function of Jamaica's central bank, Bank of Jamaica. Centrally Speaking is a program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life. I'm Sheena.
And I'm Anna. Thank you so much for joining us each and every week. And to our new viewers, welcome. Hope you enjoy. Now, we've been looking forward to updating you on what's happening in the economy. I'm sure you have a lot of questions.
Anna, on that note, I felt peckish the other day and I could buy one patty. Price gone upstairs.
Yeah, sir.
You couldn't buy the cocoa bread.
You feel the patty?
Yeah.
Eh?
Do you know patty?
The whole hand then, so what they may say one conversation on Twitter. And them say, patty are $2. $240.
All right.
Yeah, if you get two patty, hype you up.
Oh, really?
You're rich.
No, I couldn't even buy the cocoa bread, but sorry. No.
So what else got up?
Everything.
Everything up. Give them an update.
Well, our guest today will explain exactly what's happening with inflation. He is Robert Stennett, Deputy Governor with responsibility for research and economic programming and financial stability at Bank of Jamaica.
All right, so our conversation with Robert comes up right after we check in with the street.
Whose statue is at the front of Bank of Jamaica building downtown? Is it A, Donald Sangster, B, Hugh Shearer, C, Noel Nethersole, or D, Brian Winters?
Bank of Jamaica. I would say you share, I'm not sure.
Donald Sangster?
Why would you say it's Donald Sangster?
I guess it's because he's former Jamaica Prime Minister.
Brian Winter.
Why do you think it's Brian Winter?
Because you give me two names already, you give me a clue though, and tell me say one of them. So I work with the last two.
A. That look like, can't remember his name, but that look like, what name? Donald something.
But still I said Donald Sangster.
You sure?
Why do you think it's Hugh Shearer?
Would have been most like him because, I mean, the name they would have more go with Jamaica.
A. Donald Sangster.
Why do you think it's Donald Sangster?
I don't know him, but I just say so.
I would say Hugh Shearer.
Why would you say it's Hugh Shearer?
Because he was a great prime minister in Jamaica.
I think I see.
Why would you say it's C?
Yeah, man, I see. If you go down there and look, and if I know the rest of them, you know see him.
The Noel man. I can't pronounce the last name, but yeah, the Noel guy.
Yes, you got it right. The statue at the front of the bank is Noel Nethersole, who is considered to be the father of Bank of Jamaica.
Not Noel Greenland.
No. That's another person who forces us to sit here.
Our executive producer is not him.
Nope. He went to KC. I'm
So he
sure.
couldn't get a statue.
Nope.
But Noel Nethersole was the Minister of Finance between 1956 and 1959. He is credited with being the father of Bank of Jamaica.
And with that little history lesson from Anna, we take a break.
We're here to open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for Safe to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
Welcome back to Centrally Speaking. Robert Stennett, Deputy Governor in charge of Research and Economic Programming and Financial Stability, joins us.
Robert, welcome back to Centrally Speaking.
Thank you. Always nice to be here.
Of course.
All right, so you came before, but we never get to ask you.
Personal questions.
Yeah, the personal questions. You're nervous. All right, which high school did you attend and
Which
what
parish?
parish are you repping?
Oh, well, that's not a bad question.
No.
I am from the friendly city of Montego Bay.
Friendly.
I went to Cornwall College.
All right.
And of course, Montego Bay is in St. James.
All right.
However, I think I need to say that I am a naturalized Woolmerian. My kids have gone to Woolmer's preschool,
Right.
prep school, and high school. So obviously, I'm a naturalized
Oh, they're
Woolmerian.
baptized.
Okay. So, the last time you came, you taught us that monetary policy, it refers to the actions that the central bank takes to treat with or support price stability. Right. Which is the bank's primary mandate.
Yes.
Okay.
And that inflation targeting is one of the tools that the bank uses to keep inflation low, stable, and predictable. And our viewers now know that the inflation target is 4 to 6%.
All right.
All right. So,
having learned all of that, which is what you taught us, the 46% target has been missed, and it has been missed for 9 consecutive months.
Since August.
So you're going to talk to us, that is since August of last year. So you're going to share with us and our viewers who have been experiencing increased prices in a number of things. Why have we missed that target?
Wow, thanks for a very tough opening question, Anna
You're most
and
welcome.
Sheila.
You're welcome.
But at least it gives me an opportunity to put the issue into context.
Right.
I think we'll start with some statistics. The annual point-to-point change in the CPI, the average of those annual point-to-point change in the CPI since
Consumer
August.
Price Index.
Yes, the Consumer Price Index since August to April has averaged 9%, which means that if you were to take the average price level between August and April and compare it with the average price level for the previous year, those prices that Jamaicans consume have gone up by 9%, which is clearly above the 4 to 6 target range that the bank has to deliver. I think some statistics some additional statistics are in order. The main items in the consumer price index that has contributed to the breach of the target is food and energy-related prices.
Okay.
So when I talk about food, I'm talking about all foods, raw foods, processed foods, including cereals, your bread, your milk, your bread, your flour. I'm talking about oils and fats. I'm talking about agricultural products. I'm talking about, drinks. And when I speak about energy-related prices, I'm talking about your electricity bill, your bus fares, your gas bills, and so on. So the chief contributors to this has been those prices. Food prices have gone up by 15% on a year-over-year basis at April.
Right.
From last year to this year.
Right, from April this year relative to April
last year, 15%.
15%.
Enough that.
Yeah, that's a lot.
It is. Energy related prices have gone up by about 25%. So you can see that even though the average price level have gone up by 9, these particular items have gone up pretty substantially. What is happening in Jamaica is no different from what is happening in the rest of the world.
Yeah, we can appreciate that.
We have been affected by 2 series of unfortunate events.
Okay.
The first one, which I'm sure has been discussed with you already, is the impact of the COVID-19 pandemic.
Right.
What has happened is that COVID pandemic has affected the global supply chain, affecting important nodes in this process that takes goods from where they're produced elsewhere in the world to us here in Jamaica.
Yeah.
I'm talking about the shipping industry.
Right.
I'm talking about the ports.
Yeah.
I'm talking about the trucking industry, computer chip manufacturers.
Right.
Those are critical elements in the global supply chain. And COVID, because a lot of these are contact-sensitive industries.
What do you mean by that?
Meaning people have to get together to work.
Okay.
COVID has caused them to change the way they work. And therefore, the pass-through of goods through these points have slowed.
Oh, okay. Right.
The other point is that when the world started to come out of the lockdown by COVID, the demand that was placed on these systems was such that it just overwhelmed them.
It was aggressive.
And there were significant backlogs of everything that we wanted to import in these points.
Yeah.
So that's the first factor. Once you have a shortage, the price of these things are going to go up. The price of shipping, transportation are going to rise. The price of storing goods on ports are going to rise. The price for shipping goods or trucking goods are going to rise. So that's the first unfortunate event. The second one is clearly the Russia-Ukraine war, which has affected the production of some of the very same commodities that were originally affected by the COVID-19 pandemic.
Oil and grain.
Oil and grain and fertilizer prices. Right. So, Anna, Sheena, this is what Jamaica is experiencing now. These prices have shot up and they're affecting Jamaican consumers.
What can we expect, in the foreseeable future? More inflation, higher inflation?
One thing about the future that is certain is the uncertainty.
All right.
We don't know how long the war between Russia and the Ukraine is going to last.
Right.
We don't know if it's going to get more intense. We don't know if the major economies around the world are going to apply new sanctions to Russia.
Okay.
And all of these factors can contribute to an extension of the strain that are placed on commodity prices. We also don't know if there's going to be another virus outbreak or the escalation of another strain of COVID-19. So there's a lot of uncertainty. But what I can tell you is that the central bank remains committed to fighting against inflation and will do whatever it takes to ensure that in the long run, that inflation returns to being low, stable, and predictable. So with that said, the outlook is that we are going to continue to have some price increases for the remainder of the year, but the rate at which these prices are going up is going to go down.
Okay.
So our outlook is that inflation is going to peak somewhere between 12 and 15% by June.
June 2022?
June 2022. And thereafter, we expect inflation to get less and less.
Right.
And it should come back to the bank's target range by June 2023.
All right, so earlier in your explanation, you would have spoken to Consumer Price Index. I want you to elaborate on that for our viewers. What exactly is it? And what is in the Consumer Price Index basket, and clarify for our viewers whether or not they can actually shop from that basket in order to offset some of their costs.
Yeah, good question, Sheena.
All right.
The CPI is not really a basket, but I just want to start by saying that I nor anybody at the central bank is really the expert on the CPI basket.
Right.
Statin is the expert, and I'm sure they are usually much better placed than we are to explain what is involved in the CPI basket. However, this basket, as we understand it, is really a list of goods and services that are sold in Jamaica and which are consumed by the average consumer. The last basket that Statin produced, or the last list that they produced, contained about 320 items. And what they do is they collect the prices of all the goods and services on this list, the 320 items, on a monthly basis. They average them and they compute the inflation rate on the assumption that the amount of goods and services that are consumed by consumers remain unchanged.
Right, so Robert, there are viewers who are just starting to watch Centrally Speaking. Them just roll through, see the channel and say, yeah, watch them taking them too girly. Hear what the money I say. And they're hearing us talking about inflation targeting. They've never heard the term before. So what is it? What does it look like? And why does Bank of Jamaica target inflation?
I think one way to answer the question is just list the things that must be in place for a bank to be target inflation.
Yeah.
I think the first requirement is that the bank must publicly commit to an inflation target.
Right. Which now is 4 to 6%. That's our
Right.
target.
Which is now 4 to 6%.
Right.
And it is not important where the commitment comes from, in the sense that the commitment can either be coming from the government as a stated objective, or the bank itself can publicly commit to the target. The second component of inflation targeting is that the central bank uses the available tools that it has to actually target inflation in the future.
Okay.
So it is not targeting inflation that has already happened, nor is it targeting inflation that's going to come next month. That's impossible. So what it tries to do is to use its tool to target what inflation will be 12 months into the future, 24 months into the future.
Okay.
A third condition is really about central bank independence. In order for the central bank to do that, to target inflation, it must be given the independence in order to do as it requires to target inflation.
Independence from political
Interference?
interests?
Yes. Essentially, the government must give the central bank enough space to do what is required to do in order to get the job done. If, for example, the government were to say you cannot raise interest rates, then obviously the central bank could not be a proper inflation targeter.
Right.
Okay.
I want to just say finally, inflation targeting is different from other types of monetary regimes. I can just name two of them. One is exchange rate targeting,
Which
and
we
the
used
other
to do.
one, which we used to do, and the other one, of course, is to target the money supply. So you said it earlier, Anna. We have a target which is given to us by the government of Jamaica under consultation with the central bank, and it is agreed that this target is 4 to 6%. I just want to end by saying, while we do not target individual prices, i.e. we don't target the price of flour, we don't target the price of sugar, the central bank actually evaluates the factors that are causing individual prices to rise and the factors that are likely to continue pushing these prices up in order to make its decision. So what the public does not normally recognize is that the central bank is actually its main defender in relation to the price increases that they face when they go to the supermarket, when they go to the bar, when they go to the corner shop. But that is our job, except we do it at the aggregate level.
Okay. All right. So you spoke to the exchange rate just now, and the fact that we used to target that. And now the emphasis is on the inflation rate. And there's persons who think that we really should be focusing on the exchange rate at this time. What are your thoughts on that?
Sheena, I think this debate in Jamaica has gone on for a long time, not only in Jamaica but in the Caribbean, and it is likely to continue for mine and your lifetime. It's a really important question. But I think it's important that we emphasize that there are no magic bullets. Any system that you pursue will have its advantages and they will have their disadvantages. So I want to talk about the advantages and disadvantages of a exchange rate targeting system. On the exchange rate targeting, what happens? Well, the central bank commits to fixing the exchange rate at a particular level, or it commits to ensuring that the exchange rate moves at a particular rate, 152 to 153 and so on. And it does this by actively intervening in whatever the market is to get this done. So if it can intervene by either an auction, or it can intervene directly through the commercial banks.
An auction of foreign exchange.
An auction of foreign exchange, which we've had in the past, or it can actively intervene in the market where banks trade with their customers to ensure that the exchange rate is what it is. Now, one of the benefits, of targeting the exchange rate is that it introduces certainty for the exchange rate, in the sense that people or businesses know with certainty that they can get a US dollar today for 155. They can get a US dollar tomorrow for 155. They can get a US dollar next year for 155. So there is certainty about price. And this certainty implies that they no longer have to worry about the exchange rate when they're setting the price of their goods.
Right, right.
And therefore, when you have this type of certainty about price, inflation is typically going to be absent of the influence of the exchange rate.
Okay.
Disadvantage, however,
Yes.
very, very key issue.
Yeah.
While an exchange rate targeting system introduces certainty about the price, there is no certainty about the availability
Of the currency.
of dollars.
Okay.
No certainty about that.
Right.
Let me explain.
Yeah.
The supply of foreign exchange to the economy comes from when people export, right? But then again, you also have demand for foreign exchange, which comes from when people want to buy imports.
Precisely.
And there's no guarantee that at a particular exchange rate, the amount that is earned from exports is going to be equal to the amount that is needed for imports.
Okay.
So this is where the central bank comes in. The central bank comes in and guarantees that there will be supply, at least in the short run. There will be supply at 155. But guess what? The certainty about this is never going to be there, because the people will know that if there's more demand than there's supply, that the central bank's reserve are going down.
Are going to be right.
And what do you think people are going to be watching now?
Right.
They're going to be watching the reserves.
Yes.
And if they see where the reserves are falling continuously over time, they're going to change their behavior, because they now know that at some point in time this thing is going to run out.
So they start to hoard?
They're going to
hoard, right.
And
deposits.
they are going to go to the streets.
Yes.
There's going to be, quote unquote,
a black market.
Dollars,
Yes, right.
Yes.
And if there comes a point in time when the central bank is no longer able to ensure balance between demand and supply,
Right.
we have what is called a currency crisis, where the exchange rate will have to be shifted from 155 to 200 or 250.
Whoa.
So there are no perfect systems.
Okay.
Yes.
And therefore, you just have to decide which one you want to operate.
So Robert, since October 2021, BOJ has been increasing its interest rates, which stands to reason that the interest rates on deposits in commercial banks should increase as well. We are yet to see that. I'm not sure if maybe I'm the only one, but...
I know you are.
Okay, so we are yet to see those increases.
I don't see my 50 basis points.
So I'd like to know, when should we expect to see that, those increases from the commercial bank standpoint?
All right, so let me start by, in a sense, explaining why you have not yet seen it.
Okay.
A couple of reasons. One is that the banking system has a few large players and many smaller players. If the large players, or some of the large players, have no need for funds, they are not going to have a need to raise interest rates. Why? I mean, what the central bank's actions do is increase the cost of funding for banks. And if the cost of funding for banks rise, then you expect them to increase interest rates to you, so that you will save more.
You want to save more.
And spend less. But if they are not increasing their interest rates, it means that they have enough savings from you already. And this is potentially one of the reasons why they have not yet so done. Of course, if the smaller banks see these large banks not increasing rates, they are unlikely to do that, because there's not a lot of hope that they have that they'll be able to attract deposits away from these large banks into the small banks. So it all depends on the behavior of the large guys. The second reason is that most banks prefer to wait and see what the central bank is doing before they actually change their rates. This is called menu costs associated with changing prices. As you know, changing interest rates in a bank is a massive operation that is costly for them, and they don't want to be doing it many times. So even though
meaning that they have to recalculate profits, etc.,
they have to reset their systems to be able to pay the customers the higher rates, and to be able to charge the banks or charge their customers higher lending rates. So there's an operation involved among their staff that involves changing rates. It does cost them. So what they try to do is they try to do it as least a number of times as possible, which means they need to know where they're going to move it from to where they're going to go do it and stop.
Right.
Okay.
So they're trying to get an idea of where the central bank is going to end in terms of its monetary policy actions and therefore move their rates once. So the menu cost, the fact that they want to adjust rates once is another factor that it may have explained why they're not moving it yet.
Okay.
The third, on the lending side, is that they have a commitment to their customers to give them notice, say 45 days notice before they increase rates.
Okay.
Right? So
But
that,
if you give me more,
But
I need
I
no
mean,
much
when I
notice.
need notice.
well, that's
You know what I
true.
mean? You can't just give me.
We know you're the source of
You
our
know what I
funds.
mean?
So just increase
It
it.
just increase it.
That's
man.
true. So where it doesn't hurt the customer,
Yeah, you know
yes,
what I
they
mean?
can do it immediately.
No
But where
problem.
it hurts a customer,
Tell
like
us
Yeah.
long in
on the
advance.
lending side, they will have to give you notice.
Yeah.
And then I think the final answer is that the rate adjustments occurred in a time when they were working with their customers
Right.
to ensure that they could survive the effects of the pandemic.
Also like the moratorium and all this.
Precisely.
Okay. Okay.
So if they believe that
Yeah.
their customers can't bear the increase, then they're going to wait and see
Okay.
before they adjust rates. So the central bank knew this. We knew that it would take some time for our policy adjustments to pass through.
Right.
There's this lag in the transmission mechanism, which is a normal thing. And so we know that in due course, banks will eventually start raising rates. So hold it, Sheila, you will soon
All
get
right.
your increase.
And I'll hold you to it.
Well, hold the banks to it.
I'll hold the banks to it. All right, so Robert, when next you return, you know we are going to require an update on Jamaica's performance on inflation since the start of the pandemic until now.
Okay.
All right. There you have it. Our guest was Robert Stennett, Deputy Governor with responsibility for research and economic programming and financial stability at Bank of Jamaica. We will have part 2 of our conversation with him next week. Centrally Speaking, we'll be right back. On this week's episode, we spoke with Robert Stennett, Deputy Governor at Bank of Jamaica. We'll now take a look at the highlights from that discussion. Here are the fast facts. Number 1. The main items of the Consumer Price Index basket that have caused inflation to rise have been food and energy-related prices, such as electricity and water rates, and transport prices, such as bus and taxi fares. Number 2, when we step back to look at the past 3 years, inflation has fallen inside the bank's targeting range 21 times, or 58%, which is not bad, but not yet at the level we would like. Number 3, the central bank remains a committed partner in the fight against inflation and will do what it takes to ensure that inflation in the long run returns to being low, stable, and predictable. Number 4, Bank of Jamaica has been increasing its policy rates since October 2021. One objective of this is to encourage commercial banks to increase the rates they pay on deposits. And number 5, to the extent that the central bank maintains its policy rate posture, banks will adjust their rates in response. Some have already started to do it. And that's it for our Fast Facts.
We've come to the end of our show, but it was so nice we have to do it twice. In case you didn't understand all the factors that influence inflation, we're going to have a part 2 of this program next week.
Follow us on Twitter at CentralBankJA or on BOJ's Facebook page. You can also visit our website at www.boj.org.jm.
And just as the students have been doing, we invite you to send in your questions on Twitter and Facebook.
And of course, watch Centrally Speaking next week at the same time right here on your station, when we will have another special guest.
I'm Anna.
And I'm Sheena. Thanks for watching. Centrally Speaking is a production of Bank of Jamaica.